Hello guys, welcome back to a new video. Sorry, after a long time வீடியோ போட வேண்டியதாக இருந்துச்சு. ஓகே, இன்றைக்கி வீடியோவில் நம்ம என்ன பார்க்க போகிறோம் அப்படின்னா, நான் இப்போ ரீசெண்டாக கண்டக்ட் பண்ண 2026 February 24 நடந்த CBSE போர்டு எக்ஸாமுடைய அக்கௌண்டன்சியோட சொல்யூஷன் தான் இன்றைக்கி நம்ம பார்க்க போகிறோம். ஓகே, வித்தவுட் வேஸ்டிங் டைம் லெட்ஸ் ஜம்ப் இன்டு தி ஆக்ஷன். ஓகே, this is set 1. ஓகே, இது வந்து set 1. இதுதான் கோடு, சென்னை ரீஜனோடது. set 2 set 3 இருக்குன்னா நீங்கள் ப்ராபப்ளி கொஸ்டின் பேப்பர் ஜம்பிள் ஆகிருக்கும், இல்லைன்னா கொஞ்சம் என்ன சொல்கிறது வேல்யூஸ் மாதிரி இருக்கும். அதுக்கு ஏற்ற மாதிரி நீங்கள் ஆன்சர்ஸ் மேபி ட்ரை பண்ணி பாருங்கள். இஃப் யூ டோன்ட் கெட் ஆன்சர் ஆர் இஃப் த கொஸ்டின் இஸ் கம்ப்ளீட்லி டிஃப்ரெண்ட், you just put it in my comments. I will reply back to you. Okay, let's move on to the first question. Part A. Aurora and Gurmeet are partners. Profit sharing ratio 3:2. Starting from 1st October 2024, Aurora withdrew 30,000 at the beginning of each quarter for his personal use. So each quarter, but only 6 months. That means only 2 quarters, from October 1 to 31st to March. It is 6 months. So that means there are only 2 quarters. Interest on drawings was to be charged at 12% per annum. Okay, so it is the formula for this is average period method. Formula for average period method is interest on drawings is equal to total drawings into rate of interest divided by 100 into average period divided by 12. How to calculate this average period? First drawings months accrued plus last drawings months accrued divided by 2. In this case, there are only 2 drawings since October 1, beginning of each quarter, October to March, it is 6 months. So there are only 2 quarters. So totally there are only 2 drawings, first and last. First drawings is drawn on 1st October 2024. That means October, November, December, first quarter over. Second quarter, Jan 1. So these are the 2 drawings. So what is the months accrued, interest accrued for the drawings drawn on 1st October? It is exactly 6 months. What is the months accrued for the 1st January? It is 3 months. So the average period is 6 plus 3 divided by 2. So it is 4.5. Okay, so let's apply this. Okay, so total drawings is it is 30,000 per quarter. So that means 60,000 into rate of interest is 12% per annum into average period we just calculated, it is 4.5 months. So it is 4.5 by 12. So this 12 gets cancelled, these 2 zeros get cancelled, so remaining 600 into 4.5. 6 into 4, 24. 6 into 0.5, that is 3. So 24 plus 3, 27, and we have 2 zeros, 2,700. This is the answer. Okay. And the second question is, at the time of admission of a new partner in a partnership firm, the newly admitted partner brings an agreed amount of capital either in cash or kind. It's true. So at the time of admission of a partner, generally a partner brings some agreed amount. For why he brings? Okay, on admission, the new partner gets the right to acquire the share in assets and the profits of the firm. Of course, it is also correct. So the reason why he has to bring capital is that since some profit is given to him, some share of profit is given to him, and he also has the claim on the assets, so he has to bring capital for that. So which is a correct explanation too. So both A and R are true, and R is the correct explanation. Okay, that's it. Merek Limited forfeited 6,000 equity shares of 10 each for non-payment of final call. So entire 10 has been called, in that 3 is not paid. That means 7 rupees is paid. This is the amount received. Minimum amount per share at which these shares can be reissued is 3. So maximum discount that we can allow as per Companies Act 2013, the maximum discount that the company can allow is the amount credited to share forfeiture account, which is this 7 rupees. So maximum 7 only we can allow discount. That means minimum 3 rupees we have to issue this. They are asking minimum amount at which these shares can be reissued. So minimum 3 only, we cannot go 2. 2 means it will become 8 rupees discount, which is against the act. So it's minimum 3. Okay. Nori Limited issued 20,000 11% debentures of 100 each at a premium of 10%. Okay, issued at premium, but redeemable also at premium 5%. So this is loss, but this is a gain which will credit to securities premium. But this one we will debit loss and credit to premium on redemption of debentures. The loss on issue of debenture account will be debited by, it's very simple, 100 rupees la 5%, 5 rupees. So 20,000 into 5, it is 1 lakh. That much simple. Then Guru Prakash partners profit sharing ratio 7:3. They admitted Anu as a new partner for 1/4 share in the profits of the firm. On the date of Anu's admission, profit and loss account of Guru and Prakash showed a credit balance of 40,000. So there is a profit. What is the journal entry for the credit balance of P&L distribution? It is P&L account debited to the old partners Guru and Prakash in the ratio 7:3. So 40,000 P&L debit. If you see, you have to reject this too. Here P&L is not debited, and you also have to reject this because new partner is also credited here. So you no need to even check this value, directly you can choose option B. So if you 40,000, it's waste of time only dividing the 40,000, because it's very clear that these 3 options A, C and D are incorrect answers. By just looking at them, you can easily find profit and loss is credited in these 2. So this is wrong. Here option A has Anu, new partner. That is also wrong, because we have to give this to the old partners only. So obviously it should be option B. If you divide the 40,000 into 7:3 also, you'll get the same answer. Fine. Samta, Mamta and Geeta. There are 3 partners. Profit sharing ratio 11:54. On 31st March 2025, Samta died. So Samta is the first partner. Always circle the deceased partner's share of profit. Samta's death. Goodwill of the firm was valued at 180. The necessary journal entry for the treatment of goodwill on Samta's death will be, okay, this is journal entry for the goodwill, as there is no new ratio. So the gaining ratio will be the remaining partners new share, 5:4 the new share of the remaining partners, and that is the gaining ratio of the remaining partners Mamta and Geeta. So the journal entry for this is Mamta's capital account debit, Geeta's capital account debit to Samta. If you see, these 2 are eliminated, okay, because here Mamta, here outgoing partner is debited, but actually gaining partner has to be debited, which is the continuing partners. Retiring partner is the sacrificing partner whose capital account should be credited. So either it should be option B or D. Now how much we have to credit? See, this is also wrong. We should not credit the full goodwill to Samta. Samta will get only her share of goodwill. So obviously it will be D. We no need to even check this value. You see, 1,80,000 is the goodwill. In that, 11 by total is 20. So total 20 means 18,000 divided by 9,000. 9,000 into 11, 99,000. So obviously this is the answer, option D. That's also quite easy. So in a question like this, generally try to find like this options, so that you will save much time. Time saving is a big issue. big issue in our accountancy exam, because always my students come and tell me, sir, time pattala sir, 3 hours pattala sir, board will never give extra time. So we should know how to manage this. So learn these small tricks where we can save our time. Manshi and Uma were partners in a firm and their capitals were 4 lakh, 2 lakh respectively. NRR is 15%. Goodwill of the firm was valued at 4 lakh. If the goodwill was calculated at 4 years purchase of super profit, what is the average profit? So they are asking us to calculate average profit. So the goodwill is 4 lakh calculated at 4 years purchase of the super profit. Let me do this in the note. So they said that goodwill is equal to 4 years purchase of super profit. So which it was for goodwill is 4 lakh. So that means the 4 lakh. So I am doing it formally to உங்களுக்கு புரியணுங்கிறதுக்காக. Since it is an MCQ, நீங்கள் எவ்வளோ டீட்டெயில்டாக போடணும்னு அவசியம் இல்லை. I am doing it like a 3 mark sum. Okay, you do these steps in rough paper roughly so that you can save time. Super profit into 4. So obviously this 4 when it goes other side, it will become division. So super profit should be 4 lakh divided by 4, which is 1 lakh. And then where is it? Their capital is 4 lakh plus 2 lakh. There are no reserves and surplus. So 6 lakh is the capital employed. So normal profit is 6 lakh into 15 by 100. NRR is so normal profit is equal to 6 lakh into 15 by 100. 10% na 60,000, 5% na 30,000. So 60 plus 30, 90,000 is the normal profit. Okay, so super profit is equal to average profit minus normal profit, that is 1 lakh. Now we know the normal profit is 90,000. So the average profit, this 90,000, when it goes to the other side, it will become the addition. So 1 lakh 90,000. So answer is 1 lakh 90. Reserve capital is that portion of subscribed capital that can be called only in the event of winding up of the company. Yes, this is subscribed capital, not uncalled, not called up. It's an uncalled capital, part of subscribed capital which is not called. Okay, not called, so it's not paid up, not called, not uncalled. Uncalled means simply kept as uncalled, not a reserve capital. So reserve capital is part of subscribed capital. The debentures which do not carry a specific rate of interest are called as zero coupon rate bonds. Zero coupon bonds we call them. Okay. John, Honey, Rakop, 3 partners, profit sharing equal. On 31st July 2025, John died. His share in the profit of the firm from the date of his last balance sheet till the date of his death will be. Okay, since there is no information, new ratio and gaining ratio will be same. So this will be debited to P&L suspense account. Debited to P&L suspense account. Okay. Okay. There is profit, it will be debited, but if there is loss, it will be credited. There is an ambiguity. Since they said share in the profits, we can say profit means it will debit, but if it is a loss means we will credit to P&L. Journal entry is, if it is a profit, P&L suspense to the deceased partner. Loss, deceased partner capital to P&L suspense. In that case, P&L suspense will be credited, but let's assume it as a profit. Okay, so it is C. Shashi, Maya, Komal, 3 partners, profit sharing ratio 5:3:2. On 31st March 2025, Komal retired. So Komal is the 3rd partner. She goes out. The new profit sharing ratio between Sasi and Maya was decided at okay, new ratio is given between the continuing partners. Okay, yes, the gain or sacrifice of Sasi and Maya. Okay, you just have to calculate. Gain is equal to new share minus old share. This is the formula. Let's calculate for Sasi. I write simply S. New share is 3:5. That means 3/8 minus old share is 5/10. If you do cross multiply, you can do cross multiply. You can do LCM also. LCM is 40. So to convert 8 into 45, 15/40 minus 20/40. So it is minus 5/40. So she sacrificed. Let's check Sasi sacrifice. So this is not correct. This is not correct. And Sasi sacrifice is 1/8. So that means both A and has 1/8. 5/40 means 1/8. So let's calculate for the another one, who is Maya. That is 5/8 minus 3/10, 40, 25 minus 12, 13 by, so this is gain, and so this is the answer A, because here they said sacrifice. This is wrong, so obviously A. Alok, Sara, Aditya, 3 partners sharing profits and losses in the ratio of 5:3:2. On 1st January 2025, Alok advanced a loan of 2 lakh. Alok has given a loan to the firm. In the absence of the partnership agreement, the amount of interest on loan due to Alok on 31st March. Since he given loan on 1st January 2025, just 3 months interest is allowed. So on 2 lakhs, as there is no partnership agreement, as per the provision, it is 6%. So on this through 2 lakh, 6% for 3 months. So divided by 2, this 20 will get cancelled. 2000 by 2, 1000, 1000 into 3, 3000. So answer is 3000 interest. Sudama, Sharma and Varun were partners in a firm sharing profits and losses in the ratio of 6:3. Sharma retired. Sharma is the second partner. On 31st March 2025, the gaining ratio of okay, since there is no information, the remaining partners will carry the firm in the ratio among themselves, which is 6:3. If you simplify this 6:3, it will become 2:1. So answer is 2:1. Hari, Murari, Abhi, 3 partners, profit sharing ratio 8:4. Murari retired. Murari is the center partner. Hari and Abhi decided to share profits in the new ratio is given. The gaining ratio we have to calculate with that formula. That is gain is equal to, gaining share is equal to new share minus old share. So Hari new share is, here it is 2:1. So 2/3 minus Hari's old share is 8 total is 19. So here we have to do cross multiplication. So 19 into 3 is 30 plus 27, 57, and then this is 38 minus, and this is 24. So the answer is 15/57. Okay, let's wait. Then let's calculate for Abhi. Abhi new share is 1/3 minus Abhi's old share was 4/19. It is 30, 27, 57 minus 19 minus 12. So it is 7 by 15 is to 7. Oh, sorry, it is 14. 38 minus 24, it is 14. My mistake. So 2:1. Oh, okay, we should not have calculated this. See, the ratio among the continuing partners is 8:4, which is 2:1. The new ratio among the continuing partner is also 2:1. Then the gaining ratio also will be 2:1. Okay, I wondered why the previous question, the R question, was so easy, and the second question is a little bit calculable. So they have made a trick here. This is the trick. Okay, fine. Munna Shonu were partners in a firm, sharing profits and losses in the ratio of 4:1. Their fixed capital 40 lakh, 30 lakh. During the year, Munna withdrew 50,000 for personal use. No data of drawings is given, and interest is charged at 6% per annum is there. Since date of drawings is not given, so we have to charge half the period the business has run. The business has run for the whole year, so 50,000 interest is 6%. So that means 6% on that 50,000 should be 3,000. In that half 1,500. So it is Munna's capital. See, here you can eliminate this too, since Munna's current account should be debited. So this also you can eliminate. So you don't need to even calculate the value directly. See, this is the only entry which is correct. Munna's current to interest on drawings. Since it is fixed capital, current account has to be debited, not the capital account. So option D, 1,500. Sujata, Lakshmi were partners in a firm, sharing profits and losses in the ratio of 2:1. On 1st April 2025, they admitted Raghu as a new partner for 1/5 share in the profits. On that date, it was found that equipment is undervalued by 90. So we have to increase, which is a gain. After the revaluation, the balance showed an equipment of 3 lakh. The value of equipment shown in the books is very simple, 3,90,000. We are going to increase the value because it is undervalued. So we are going to increase it by 90,000. So 3,90,000. On 1st April 2024, DD Limited issued 2,009% debentures of 50 each. If you have any doubt, or if you feel that I'm explaining it a little bit faster, you just put it in the comment section. I'll surely give a reply to that. Don't worry. Okay. On 1st April 2024, DD Limited issued 2,009% debentures of 50 each at a premium. So issued at premium, redeemable at premium. Interest on debentures was to be paid on half-yearly basis on 30th September and 31st March. Interest on debentures for the year. So that means for the year we are paying 2 interest. But they are not asking what is the interest paid on 31st March. They are asking the interest for the year ended 31st March. For that year ending, so we have 2 interest. So it's full year interest. So the face value is 20,000 into 50, which is 1 lakh. Where is it? Yeah, 1 lakh. 1 lakh 9% interest, 9,000. So this is 4,500 on September 5, 4,500 on March. So for the year we have 2 interest, which is totally 9,000 transferred to statement of P&L. Universal Limited took over machinery of 3,30,000, furniture 1,60,000, liabilities 80. So the net worth is 3,30,000 plus 1,60,000, 4,90,000 minus 80. So net worth is 4,10,000. But purchase consideration is 4,50,000. Okay, so that means 40,000 goodwill. Payment to Amol Limited was made by the issue of 10% debentures of 50 each at a discount of 90. The number of debentures issued. So purchase consideration formula is number of debentures is equal to purchase consideration divided by issue price. So purchase consideration is 4,50,000, as there is no part payment. Whole value of purchase consideration we are going to issue debenture, and the issue price is, face value of the debenture is 50 at a discount of 10. So that means 10% discount is 5 rupees. So 50 minus 5, 45. So it is 10,000. Okay. Yes. At the time of forfeiture of shares, share capital account is debited with the called up amount on forfeiture shares. What is called, that only we will debit. Uncalled amount, since not credited to the capital account, we will not debit. So only called up face value of the share only we will debit, not the full face value, how much ever is called. The reason is, whatever is called, we would have passed the due entry. Share application to share allotment, share application to share capital, share allotment to share capital, share first call to share capital. So we credit share capital as soon as it is called. If an installment is not called, we don't credit. So you no need to debit which is not credited. So that's why only called up amount only credited to the share forfeiture account, which we have to debit at the time of forfeiture. Okay. Sushil, Sapna, partners of profit sharing ratio 3:2. On 31st March 2025, the firm was dissolved. On that date, there existed balance of 1,20,000 in sundry creditors. The sundry creditors were payable after 3 months. They were paid immediately at a discount of 12% per annum. The amount paid to sundry creditors means we have to calculate discount. So on that 1,20,000, 12%, since it is payable after 3 months, we will get 3 months discount. So 12, 2 zeros, 1,200 into 3, 3,600. 1,20,000 minus 3,600, 1,16,400. Yes, this is the answer. Raha, Naveen, Vandana, partners, profit sharing ratio is equal. Naveen retired on 31st. Balance in the capital account after making necessary adjustments on account of reserves, revaluation of assets and reassessment of liabilities was 1,27,000. Naveen was paid 1,50,000 in full settlement of his claim. The value of the goodwill of the firm. So the difference in this is the goodwill of Naveen, that is 1,50,000 minus 1,27,000, the hidden goodwill of Naveen, which is 23,000. So because the adjusted capital came 127, but we settled him 150. So that means the 23,000 additional amount given to him is the goodwill of Naveen. Since his share is 1/3, reciprocal of his share will get firm's goodwill. That is, firm's goodwill 1/3 the 23. Okay, that's what firm's goodwill. Goodwill into Naveen share 1/3 is what? This 23. So that means goodwill is equal to this 1/3. When it goes other side, it will become 23,000 into 3/1, which is 69,000. Okay. Namita, Narendra, Kunwar, partners, profit sharing ratio 3:1. The firm closes books on 31st March. Kunwar died on 30th September. His share in the profit of the firm from 1st April 2025 to 31st was calculated as per the provisions of the partnership deed, which amounted to, okay, they have calculated the value. On the date of Kunwar's death, the balance sheet of the firm showed a general reserve of 40,000 and the profit and loss account debit balance of 80,000. Okay, I will tell you the journal entry, because if I write, it will take some time. Okay, so journal entry for this profit is P&L account, that is profit and loss suspense account, profit and loss suspense account debit to Kunwar's capital account, 15,600. Narration is Kunwar's share of profit is credited to his capital account. Okay, then there is a general reserve of 40,000 which has to be credited to all the old partners in 3:1:1. Journal entry is general reserve account debit to Namita's capital, to Narendra's capital, to Kunva's capital, and this 40,000 is divided in 3:1:1. Total share is 5, divided by 5 means 1 share is 8,000. So he is having 3 share, 24,888. This is the distribution. And profit and loss account has debit balance, so this will be credited. Suppose partner's capital will be debited, Namita's capital account debit, Narendra's capital account debit, Kunvar's capital account debit to profit and loss account 80,000, just double of that value. So general reserve value, you just double it. Okay, that is 48, 16, 16. So these are the 3 journal entries. If you don't get it, just please rewind and then listen once again, you will get it. Still, if you still don't get it, please put it in my comment section. Naik, Vinay and Vibhuti, 3 partners in a firm, sharing profits and losses in the ratio of 4:2:3. On 31st March 2025, their balance sheet was as follows. Okay, what they are asking: past necessary journal entries for the general reserve, revaluation of assets and reassessment of liability, and goodwill of Naik and the retirement. Okay, fine. Okay, for general reserve, I will just tell you. General reserve account debit to Naik's capital, Vinayak's capital, Vibhuti's capital. This is journal entry. General reserve debit, partner's capital credit, 45,000 debit, and credit this 45,000 in 4:3 ratio. That is total 9. So divided by 9 means 1 share 5,000. So 5,000 into 4, 20,000. 5,000 into 2, 10,000. 5,000 into 3, 15. So 20, 10, 15. So this is general reserve distribution. And then we have loss, revaluation loss, they have calculated and given. For this journal entry, partner's capital account will be debited. That is, debit all the 3 partners' capital account and credit revaluation account 18,000. This 18,000 should be debited to the partners in this ratio. That is 18,000 divided by 9. 1 share is 2,000. So into 4. Sorry, what I said, 2,000. 2,000 into 4, 8,000. 2,000 into 2, 4,000. 2,000 into 3, 6,000. So that is journal entry for revaluation. And goodwill. And the goodwill is 1,80,000. And Naik retired. Naik share is 4/9. So into 4/9 divided by 9 means 20,000. 20,000 into 4. So 80,000 has to be credited to Naik's capital and debited to Vinay and Vibhuti. And since there is no new ratio is given, goodwill has to be debited to the remaining partners in gaining ratio, which is just this remaining share, 2:3. Okay, this 2:3 is the gaining share. So divide this in 2:3. Divided by 5 means 1 share is 16,000. 16,000 into 2, 2:3 said I said it, yes. Into 2 na 32, into 3 na 16, into 3 na 48. So debit 32,000 to Vinay, debit 48,000 to Vibhuti, and credit 80,000 to Naik. This is the 3 journal entries. Okay, 3 mark, 1 mark for 1 journal entry. Kiara Limited purchased assets worth 12,40,000 and took over liabilities of 3,40,000. So net worth of the business is don't worry. The purchase consideration of 11 lakh. Okay, the net worth is 9 lakh. That is 12,40,000 minus 3,40,000, which comes 9 lakh. 9 lakh value of the business has been taken over at 11 lakh. 2 lakh extra is given, which is the goodwill. Kiara Limited paid half the amount by check, and the balance amount was settled by issue of 9% debentures. Can I write here? Okay, I'll write here itself. Since okay, journal entry for this: what asset they did not name the asset, so I will write sundry assets. So sundry assets account debit, as we calculated, there is goodwill to sundry liability to the vendor is Amrex Limited. Okay, and 12 lakh 40, 3 lakh 40, 11 lakh. It is 12 lakh 40. This is 3 lakh 40, and purchase consideration is 11 lakh, and it came difference is 2 lakh, 15 lakh 40, sorry 14 lakh 40, 14 lakh 40, and we are going to settle this 11 lakh by issuing 9% debentures of 100 each at a premium. So 110 is the issue price. So number of debentures I'll calculate here. Number of debentures is equal to net purchase consideration. In that, half the amount has been paid by check. That means out of this 11 lakh, 5 lakh 50 has been paid by check. Remaining 5 lakh 50 only we are going to issue debenture. The issue price is 100 plus premium 10. So 1010. So 11 by 55. 55 by 11 means it is 5. So it is 5,000 debenture. So journal entry, the second journal entry would be Amrex Limited account debit to bank, because half you are going to pay. Remaining half and the 9% debenture, since it is issued at premium, securities premium. So Amrex Limited is 11 lakh, bank 5 lakh 50, and debenture is 5,000 debentures of 100 each, always face value. Remember, 9% debenture should always be credited with face value. Your face value is 100. So 5 lakh, and premium is 5,000 into 10, 50,000. 11 lakh tally. So these are the these are the entries. 2 entries, 2 mark, and that calculation of the number of debenture 1 mark. Okay. On 1st April 2024, Zara Limited issued 8,009% debentures of 100 each at a discount of 10%. The company had a balance of 50,000 in the securities premium account on the same date. Pass necessary journal entry for issue of debenture and write off the discount. Okay, let's first pass the issue entry. 8,000 debentures at 90 rupees, 100 minus 10. Okay, so 19 la B. The first entry is bank account to debenture application and allotment account. We received 8,000 debentures at 90 rupees. 8 9s are 72. There are 4 zeros, which means 7 lakh 20. Then transfer entry for this is it redeemable, something given? So there is no redeemable at premium, so let's assume it as par. So only discount is the only loss we have. So the transfer entry would be debenture application and allotment account debit, and discount on issue of debenture account debit to. So this debenture application allotment, what credited here, that only you have to debit here. And discount is 8,000 debentures 10 rupees discount, so 80,000. And as I said, it is always face value should be credited 100 rupees. So it is 8 lakh. Sorry, there is a call. Please wait. Sorry. Yes. So this is the journal entry, and they have also asked us to pass journal entry for the writing off of discount. So we have a discount of 80,000, which we have to transfer to securities premium if there is, and there is a balance of 50,000. The remaining 30,000 we have to transfer to statement of P&L. So that is the third entry. Is date given, you have to write the date. Yes, date is given, so kindly follow date for this debenture chart. Okay. Sorry guys, there was some problem with the internet. I don't know what happened. I just completed 20 up to 22 hour questions. Up to this question I have completed, but I think you guys got till 19th question only. Yeah, I was talking about the date, this question. Okay, if the dates are given, so you have to write the dates. So I already completed this problem, but I will explain once again since it was not recorded. Two entries I already passed, and you have to write the date if the dates are given. And at the end of the year we will write off this discount on issue of debenture, since there is securities premium 50,000 balance in the question, which we will transfer to securities premium, this loss, this discount 50,000. Remaining 30,000 we will transfer to statement of P&L. So this is the journal entry for the transfer of writing off of discount on issue of debenture. Then after that, question number 20. We have workman compensation fund 1 lakh. In case 1 we have a claim 120 excess claim. In case 2 we have 80,000 only lesser claim. In case 3 exactly 1 lakh claim. So 3 entries I have already passed. First one, since the claim is more than the WCF, excess 20,000 is the loss, which we will debit it to revaluation account. We'll transfer this to revaluation account. So this is the journal entry for the first one. Okay, and then in the second one, 1 lakh we will transfer 80,000 to the claim. Balance in excess reserve we have, fund we have, which we have to transfer to the old partners in old ratio. So the old ratio is, remaining share is 20,000, and total that 20,000 has to be divided in 974 old share, which is the total of this 974 also comes 20 share. So 20,000 divided by 20 share, 1,000. 1,000 into 9, 1,000 into 7, 1,000 into 4. So this is this second one. Third one I did not pass journal entry because it is easy. Claim is also 1 lakh, reserve is also 1 lakh. So which means WCF debit 1 lakh, to claim on workman compensation 1 lakh. This is journal entry. That's why I skipped that one, but I explained it. 21 la we have two case of issue of debentures. In case 1, I think I rubbed that case 1 and I replaced this with this one. Okay, big mistake because it was not recorded. I wrote case 1 and then I rubbed the case 1 and I wrote case 2 on it. So because of it, this is case 2. Case 1, same, this entry will be same, bank account debit to debenture application, but in case 1 40,000 debentures only we are issuing at 100 rupees, premium of 10 rupees. So 40,000 into 110 will come this entry. Okay, here it will come 40,000 into 110. So bank for 44 lakh, to debenture application and allotment 44 lakh. So that 44 lakh we will debit debenture application, we will credit debenture, and we will credit one more account to securities premium 44 lakh. Here for debenture 40 lakh, 4 lakh securities premium, because 10 rupees is securities premium. And then we also have a loss of 5%, which is 5 rupees, this one. So 5 into 40,000, 2 lakh. So this will come, loss to premium 2 lakh, 2 lakh will come. Here it is 10%, so 5 lakh it came. This is the second case. This is question number 21. In question number 21, second case la, it is issued at par, so quite easy. Issued at 100 rupees only we received, that will transfer to, see, 5 lakh into 50,000 into 100, 50 lakh we received, and then we transferred it to 9% debentures. No securities premium for the second case. That's why. Okay. Then this 5 lakh loss will transfer to premium on redemption of a debenture. So this is the journal entry for case 2. Then question number 22A la, there are two partners, ratio is 3:1. They are admitting Agarwal, a new partner, for 1/5 share, and he is given a guarantee 75,000. In any deficiency arises, Jain and Gupta will bear it in the ratio 1:3, different ratio. During the year there is a profit of 3 lakh. Okay, Gupta will get 60,000 only. Okay, this you can calculate without calculating new ratio, but some of you find it difficult, so I have calculated the new ratio. I will also tell you how to do this sum without calculating the new ratio. Old ratio is 3:1. Agarwal is given 1/5. Since there is no information regarding how Agarwal got this 1/5, we have to do the sum with the remaining share. If 1/5 is 1/5 of the firm, new share is given to him, now remaining 4/5 is there in the firm, which will be taken by Jain and Gupta in the old ratio. So 4/5 has to be divided in this 3:1. So 4/5 into 3/4, 4/5 into 1/4. Okay, so 4 cancel item, 3/5, 1/5. So new ratio 3:1, 3/5, 1/5, and Agarwal is there 1/5. So 3:1:1. So by we are opening appropriation account. Okay, appropriation account. By profit and loss account, from the profit and loss account only we will get this net profit 3 lakh. So that we have to transfer to the capital account. First we write Jain, leave one space because we have to write the deficiency. To then Gupta, again leave one space. To Agarwal, again leave one space. So first write these values, that is this 3 lakh divided in this new ratio 3:1:1. Okay, which is 1,80,000, 60, 60. So I told you how to calculate without calculating new ratio. This 3 lakh 1/5, 60,000 is given to Agarwal. So right here 60,000. Balance 240 is there. That 240 will be taken by them in this ratio 3:1. This is possible only in this method. If some other method, if there is sacrifice is given, then you have to calculate new ratio. So it is better you always calculate this new ratio. So this is their share of profit 180, 60, 60. Okay, so first you add Agarwal 15,000, his deficiency, and that 15,000, right, that 15,000 you have to distribute, that is deduct from Jain and Gupta in the ratio of 1:3. The deficiency bearing ratio here it is given 1:3. Okay, so that is 1/4, 3/4. If you divide the 15,000 into 1:3, you will get these two values. Subtract them, you will get their final profit. Okay, this is P&L appropriation accounts. Then the next question, 22B. Anu, Bandhu, Sheila, 4 partners, Golu. Ratio 4:3:2:1. On 1st April 2025, they decided to share future profits and losses equally, 1:1:1:1. For this purpose, the goodwill of the firm was valued at 4 lakh calculate gain or sacrifice of the partners on change in profit sharing ratio and past journal. It's very simple. So let's first calculate. I'll do it here itself. Old ratio is 4:3:2:1, and the new ratio is 1:1:1:1. Let's first calculate for Annu. That is I'm going to use sacrifice formula. Sacrifice is equal to old minus new. Sacrificing share is equal to old share minus new share. Annu's sacrifice I am going to calculate. Old share is 4/432, correct, right? Yes, 432, correct. So that means 4/10 minus 1/4. LCM is 20. So into 2, 8 into 5. So 8 minus 5. So 3/. So if you are having problem with LCM, we go for cross multiplication. That is, multiply this 2 and write it here, multiply this and write it here, multiply this and write it here. You will get same but different figures you will get, but if you simplify, it will ultimately be the same value only. The next is Bandhu. Old share is 3/10 minus new share is 1/4. LCM is 20 into 2 na 6 minus into 5 na 1 into 5 5. Okay, so 1/. So for him it came positive, so sacrifice, because we are applying sacrificing share formula. In the formula, positive answer is sacrifice, negative answer the opposite to this formula, gain. Then next, Shilu. For Shilu, old is 2/10 minus new is 1/4. 20 into 2 na 4 into 5 na minus 5. So minus 1/20, which is gain. Then at last we have Golu. 1/10 minus 1/4. LCM 20, idukku into 2, idukku into 5. So minus 3/20. The journal entry is gaining partners account debit to sacrificing partner. That is Shilu's capital account and Golu's capital account debit. Annu and Bandhu's capital account credit. To Annu's capital to Bandhu. பேர் வச்சுருக்காங்க பந்து சந்துன்ட்டு. ABCDXYZன்னு வச்சுட்டு போகாமல் எழுத டைம் சேவ் ஆகும். இப்படி பேரெல்லாம் வச்சு டைம் வேஸ்ட் பண்ண வைக்கிறானுங்கன்னு தெரியல, பாவம் பசங்களுக்கு தான் அது ஒரு எக்ஸ்ட்ரா பேர்டன் நேம்ஸ் கொடுக்குறது. ஓகே, ஸோ குட்வில் வாஸ் valued at 4 lakh. So debit gaining partners with their gaining share. 4 lakh into Shilu gained 1/20, 4 lakh into 1/20. So everybody divided by 20, common, say 20 20 20 divided by. So divide 4 lakh by 20. 4 lakh by 20 na 0 0 cancel ana 40,000 by 2. So 20,000 is one share. Multiply with their numerators. Irada. Sorry, a call is coming, wait. சொல்லுங்க, எதுக்கு? பரவாயில்ல. sorry. Okay, divided by 20 போட்டால் 20,000 வருதா? So 20,000 into 1, Shilu வந்து into 1, அப்போது 20,000 into 1, 20,000. Gold வந்து into 3, 20,000 into 3 na Annu வந்து into 3, இவனுக்கு அதே தான் into 1. ஸோ அப்போ இவனுக்கு 60 credit, இவனுக்கு 20 credit. So this is the journal entry. That's it. இதுக்கு 2 மார்க். ஓகே, சரி, இதுக்கு 4 மார்க். ஸோ ஈஸி கொஸ்டின். Then 23. From here 6 marks starts to 4 marks over. Yes. Diwan Limited was registered with an authorized capital of 1 crore rupees divided into 1 lakh equity shares of 100 each. The company invited applications for issuing 50,000 shares. Okay. The amount was payable. Okay. Since it is case study questions, what you have to do is முதல்ல question படிச்சுட்டு வந்துருங்க. Then you go and search the information. Registered capital of Diwan. It is very clearly given. It is 1 crore is the registered capital. So answer is A. Issued capital of Diwan. They issued 50,000 shares of 100 each. Number of shares. So value only here given. Then no number of shares. Everything has rupees symbol. So value is 50,000 into 100. So which is 50 lakh. So answer is C. Calls in arrear of the company amounted to how many? A shareholder holding 700 shares failed to pay the second and the final call. So his shares were forfeited. Second and final call is 30, 40, balance is 30. So 700 into 30 is 21,000. But since they are forfeited, there is no calls in arrear. 21 இருக்கு, நில்லு இருக்கு. Now it creates confusion, right? There is an ambiguity that calls in arrear was there. Calls in arrear would be there if it is not forfeited. Forfeit ஆகலனா calls in arrear இருக்கும், which is 21,000. Since it is forfeited, there is no calls in arrear. Calls in arrear credit பண்ணி close பண்ணிருப்போம். So it is nil. And what they are trying to ask, I don't know. Since it is forfeiture, answer is nil தான், because there is no calls in arrear now. They did not ask what is the calls in arrear before forfeiture, like that. Okay, but this is a confusion. We have already informed to CBSE through OECMS that there is an ambiguity in this one, and there is also some mistake in question number 34. That also we have informed. We will pray to God that marks will be awarded for this. Okay. Share forfeiture account will appear in notes to accounts at. So since it is not reissued, so the gain will be there. 700 shares or received amount. How much is received? Failed to pay second, that is 70 rupees is received. So 49,000. This will reduce if it is reissued. So இதுலேருந்து டிஸ்கவுண்ட்டுக்கு யூஸ் பண்ணதுக்காக balance will transfer to capital reserve. Since nothing is reissued, this 49 will be there in the account. The amount of share capital presented in the balance sheet of the Diwan Limited. Okay. So out of this 50,000, 49,300 fully paid up. Only 700 share வச்சிருக்கோம்னா forfeit பண்ணிட்டோம். So this is 49 lakh 30,000 plus forfeiture account balance ஒரு 49 இருக்குல்ல, that also will add it to share forfeiture account only. That is, we will show it in share capital. We'll show it in share capital account only. They're asking what is this amount of share capital presented in the balance sheet. So it is 49 lakh 79,000. Answer C. Okay. This is not 30 is only share capital accounted balance. They did not ask what is the balance in share capital. They are asking what is the amount of share capital presented in the balance sheet. We will present by adding share forfeiture. If there is arrear, we will deduct arrear. No. So now arrear, there is no arrear since it is forfeited. The arrear is nil. Okay. If all the forfeited shares are reissued, okay, they are now putting a case. இப்போதான் if போடுறாங்க பாருங்க. Here in the case question 3 there is no if. So the answer is C தான், nil தான். If all the forfeited shares are reissued at 30 per share fully paid up. The amount transferred to capital reserve, all the forfeited share reissued at 30. அப்போ 70 rupees discount per share. கெயினும் ஒரு ஷேருக்கு 70, டிஸ்கவுண்ட்டு ஒரு ஷேருக்கு 70. மினிமம் ரீஇஷ்யூ ப்ரைஸஸ் 30 தான், 30க்கு தான் இஷ்யூ பண்ணியிருக்காங்க. ஸோ த டிஃப்ரென்ஸ் இஸ் 0, no capital reserve. We have used all the share forfeiture account as a discount. So this is the first 6 marks question, and the second 6 mark question is admission. So admission la first check how he got this 1/4, given or not given, new ratio is given or not given. What they are asking us to do, prepare revaluation account, partners capital account. So don't go and waste time by reading everything. First they ask revaluation account, open revaluation account. Question number 24. Revaluation account. Now go and read the revaluations. Revaluation I think starts from here, this and this. Furniture was taken over by Asha at 1 lakh. What is the value of furniture? 1,20,000. So he took it at 1 lakh. So there is a decrease in the value of furniture, loss. So debit 20,000 loss for us. And then liability of 5,000 included in creditors, not likely to arise. So decrease in the liability, gain by magic by creditors 5,000. The plant and machinery was revalued at 435. What is the value of plant and machinery? 4,05,000, but it is revalued at 435. So increase in the asset, gain 30,000. So by na short எழுதுறேன், but like this you should not write in exam. Since I am explaining, I need more time, so it will take more time. Okay, 35,000 credit side total, debit side total 20,000. So there is a gain which we have to transfer to the capital accounts of the old partners, Asha and Indra, in the ratio 3:2. So this is profit. Asha, Indra. So how much is the total? 35. So this side also it should be, difference is 15,000. The ratio is 3:2. Divided by 5 na 3,000 into 3, 9,000, 3,000 into 2, 6,000. So this is the profit divided among the old partners. Okay, so the next one, they're asking us to prepare a partners capital account. So directly go and open. I have not read any other information. So directly open partners capital account. No, sign up. Pudi. Put. Huh? என்னது தெரியல, எனக்கு தெரியல. போடா. Okay, sorry. So let's open now partners capital account. There are 3 partners, Asha, Indra and Suraj. I'll write short. Asha, Indra, Suraj. Suraj, Indra, Asha. So first you have to write there the old partners balance brought down. Look at the balance brought down, 4 lakh, 3 lakh. 4 lakh, 3 lakh. Not for him, but he brings by bank. I will write, since there is bank balance, but you can write cash also, no problem. He will brings proportionate capital, so that means we have to calculate. So I will write bank and I will write working note number 1. This we have to calculate. Okay, so I'm just going to so 1 minute guys. Sorry. So that we have to calculate after completing all the adjustments. So let's first complete the balance sheet. So as soon as you write balance brought down, you complete the items in the balance sheet. So look at the liability side. Is there anything to be distributed? Yes, we have a general reserve of 50,000 distributed to the old partners in the ratio 3:2. So that is 30,000, 20,000. By general reserve 30,000, 20,000. That's it. Liability side la distribute பண்ண வேண்டிய items over. Asset side la we have nothing. P&L account, goodwill, advertisement suspense. These are the items generally we find it. It's not there. So balance sheet over. Then after completing balance sheet items, come to revaluation. We have profit. That is transferred to the credit of the partners. Revaluation account, which was 9,000 and 6,000. So this is the revaluation profit. After that, premium. Goodwill was valued at 1 lakh and Suraj will bring his share of goodwill premium in cash. So which means 1/4. So into 1/4 na, I said half of, divided by 4 na, half of the half. 1 lakh la padi 50, 50 la padi 25. This will be divided among the old partners in sacrificing ratio. As there is no new ratio is given, as there is no how these people sacrificed this 1/4, it is assumed that these 1/4 was sacrificed by them in the old ratio. In the ratio la in the 1/4 அவங்க sacrifice பண்ணிருப்பாங்க. So the ratio in which they sacrifice is what the sacrificing ratio. Since they sacrificed in old ratio and sacrificing ratio in this case will be equal. So which is 3:2. So divided 3:2. This is given to old partners in sacrificing ratio 3:2. So divided by 5 pota, one share 5,000. 5,000 into 3, 15,000. 5,000 into 2, 10,000. So that is premium by premium for goodwill 15,000, 10,000. So that's it. And Asha is taking, where is it? Yeah, Asha took furniture of 1 lakh. So that you have to debit. Journal entry is Asha's capital account debited to furniture. So of course Asha's capital account debit 1 lakh, revaluation account debit 20,000 to furniture 120. So 120 value of furniture, he took it at 1 lakh. So that we will debit furniture, he took it at 1 lakh. So we will debit 1 lakh to her, Asha. That's it. All the transactions were recorded. Now what we have to do is to calculate the balance carried on. With the help of balance carried on, we have to calculate the proportionate capital of Suraj. Let's find the balance carried on. Two balance carried down, total up for the two partners 4 lakh 30, 40, 54. 4 lakh 54. Correct, right? 14 மிச்சம் 5 4. 3 lakh 36. 3 lakh 36. 4 lakh 54 3 lakh 36. So 4 lakh 54 minus 1 lakh 3 lakh 54 3 lakh. For him we have to calculate. Wait, so now proportionate capital எப்படி calculate பண்ணணும்னா, let's assume firm's capital as X. The new partner Suraj, right? Yes, Suraj capital, the firm oda capital his share 1/4. His share is 1/4. Yes, so x into 1/4 is what his he has to maintain. So x/4 is capital. Now firm's capital na ennadu, sorry, firm's capital is equal to the capital of all the partners. That is capital of all the partners அப்படிங்கிறது the 356 336 in the x/4 all together is what the firm's capital. There are 3 partners. Firm's capital now என்னது, அந்த 3 partners ஓட capital தான். So 354 plus 336 plus x/4. So firm's capital is x. So in the right side வந்து, because firm's capital is x here, 354 plus 336 690 6 lakh 90 plus x/4. இந்த plus x/4 அந்த பக்கம் போனா minus x/4. So x minus x/4 is 6 lakh. So this is like divided by 1 மாதிரி cross multiply பண்ணுங்க. 4x minus 1x. This is equal to 6 lakh 90,000. So 4x minus x, 3x by 4 is equal to 6 lakh 90,000. So x is equal to 6 lakh 90 into இந்த 3/4 அங்கிட்டு போனால் 4/3 ஆகிடும். ஸோ 6 lakh 90 divided by 3 1 lakh 30 2 lakh 30 sorry 2 lakh 30 2 lakh 30 into 8 2 lakh into 2 lakh 30 to 4 வளர்றேன், தூக்கம் வருது, வளர்றேன். 2 lakh 30 into 4 2 lakh into 4 8 lakh 30,000 into 4 1 lakh 20 9 lakh 20 is the firm's capital x. Okay, so he has to maintain, that is Suraj has to maintain the 9 lakh 20 the firm oda capital 1/4. You can simply keep this as 6 lakh 90 into 4/3 because 4 cancel ஆயிடும், or else you can also do it like this. So which is, we'll again get that 1 lakh 30 2 lakh 30 2 lakh 30 is what the proportionate capital. Okay, so go and write here. So this is working out 1 2 lakh 30. Yeah, that's it, over 6 marks sum. The next, Ajanta Limited invited application for issuing 30,000 equity shares of 10 each at a premium of 5 per share. So issued 30,000, applications received 50,000, face value is 10 rupees, premium is 5 rupees, issued application and allotment 10 including premium. So that means 5 plus 5, balance 5 is on first and final call. 10,000 shares were rejected and their application money was refunded. Pro rata allotment was made to the remaining application. Since it is pro rata, I have a pro rata table, so that I will write. Kindly follow this pro rata table for question number 25A. Pro rata table வந்து number of shares applied, number of shares allotted, excess application money. ஒரு ஷேருக்கு அப்ளிகேஷன் அலாட்மெண்ட் 10 ரூபா. Then the remaining is divided as utilization of excess money, that is for call. Next installment is call. Then what we are going to do with the excess money? Call, how much we are going to use. Refund, how much we are going to use. This is the table, and they said out of that 50,000 applications, 10,000 applications were rejected. So that means entirely refunded. So they apply, some people applied 10,000, for them you allotted nothing. Entire 10,000 shares order in the 10 rupees excess money. That is 10,000 into 10, 1 lakh. Since it is rejected, you have to refund. Then remaining 40,000 applications are there, for them pro rata. How much we can allot? Maximum 30 only. So 30. Here also excess 10,000 application, 10,000 into 10, 1 lakh. But for this 1 lakh, we'll utilize towards the next installment. Okay. See, there again, excess money with application are adjusted towards sum due on first call. So we will use it for the call. This 1 lakh, we will use it for the call, because 30,000 into next installment is 5 rupees. 30,000 into 5 now, we need 1 lakh 50. But we excess money, we have only 1 lakh. So entire 1 lakh, we will forward it to calls in advance account. Okay. So this is the table. At last, you have to total up the last 2 columns. Since there is only one value, I am not going to total. You have to do this total. Like this. If there are more than one value, since there is one value, you no need to do. But just I'm saying. So first entry is, so this sum also you no need to read full information. You see, so far I have read till this one. I did not go for this arrear and all. Oh, okay. Sorry. Now we have one more adjustments here. Sonu, an applicant of 4,000 shares, paid his entire share money with the application. That means for his share alone, we have to do separately. Yeah, that's a big mistake I did. I should have read this information. Yeah, he paid. So for him separately we have to do. So out of this 40,000, third, because for him the excess money is different. 4,000 shares applied dane. Yes, 4,000 applicant. So that means she would have got 3,000 shares. So now subtract this 40,000 and then the 4,000. Subtract panna 36. The 30 and the 3 subtract panna 27. Okay. 9 ladicha 4:3. Yes. So the excess money would be, here it is, difference is 36 minus 27, 9,000, right? Sorry, 9,000. That is 9,000 into 10, 90,000. But here for him excess money is not excess money is not 1000 alone. He paid entire 4000 rupees. Okay, I'll write here. This fellow Sonu paid 4000 into application money for 10 rupees. So 40,000 he paid. From that he got allotted 3000 shares. So that means 3000 shares or application money 10 rupees. 30, sorry, he paid entire money. He paid entire money. That entire money is 15 rupees. So that means 60,000. So from this is the money that he paid. Hope you get it. 4000 shares he applied, and he paid entire 15 rupees. So he gave us 60,000. From there 3,000 shares allotted. 3,000 shares today application money 10 rupees first you would have taken. So balance his excess money is 30,000. So that is what we have to write here. For him you should not write 1000 into 10,000 like that. For him his excess money is different. Now how much is required for allotment? That is sorry call is 5 rupees only. You see, 5 rupees only. But how much is excess money? Is the 5 rupees means 3,000 into 5 only required for the next installment, first and final call. 15,000 only required, but how much we have? 30,000 we have. So we will give to the call 15,000, balance 15,000 we refund. For them 90,000 we give it to call, because for them 27 into 5 it is 1,35,000 required, but we have only 95,000, so we give it to call. But for him 3,000 into 5 first and final call money, 15,000 required, but we are having 30,000 excess money, so we will use this 15, remaining 15 we will refund. So for the call 1,05,000, for the refund 1,15,000. I think hope most of you would not have attended these questions. You would have gone for this forfeiture, I think. Okay, fine. So this is the refund amount 1,15,000. This is the call amount 1,05,000. So first journal entry is bank to share application and allotment account. That is, we are receiving 50,000 applications. Here I wrote that 3,60,36 only. 50,000 and the for application allotment 10 rupees. So we would have received. Okay, again this also should not be written like this. 46,000 apply பண்ணவங்க தான் 10 rupees கொடுத்தாங்க. Plus in the 4,000 apply பண்ணவன் full amount 15 rupees கொடுத்துட்டான். So it is 4,60,000 plus 60, 5,20,000, not simply 5 lakh. So additionally we got that for the 4,000 shares 5 rupees 20,000. Yes, so this is the application money received, and then that we have to transfer entry is share application and allotment account debit. Allotted share application value we will transfer to share capital. In that we also have securities premium. That excess money we have to transfer to calls in advance, and there is also refund to. So this is the journal entry. Always debit this 5,20,000 what was credited in the previous one. How much allotted? We allotted totally 30,000 shares, and in that application value 5 rupees capital. So 1,50,000. Same 30,000 into 5 தான் வரும் premium. அது ஒரு 1 lakh. Calls in advance, you see this working out, this one 1 lakh 5. Bank, you see this one 1,15,000. total 5,20,000 வந்துருச்சு. Okay, this is the journal entry. Now okay, there is also 300 shares arrear with the first and final call. Her shares were forfeited after that. Okay, let's first pass due entry for the first and final call. Share first and final call account debit to, there is no premium, so 30,000 shares 5 rupees due, so which is 1,50,000. So due entry we have to write full for all shares. Okay, I did not write narration to save time. Narration for the first one is application money received for 50,000 shares. Second one, transfer of application money to share capital and securities premium, and adjustment of excess money, that is transfer of excess money to calls in advance, and refund of excess money for the rejected shares. Okay, and then this one is first and final call money due, without a narration. Then the fourth one we have arrear, bank account debit. See, we have to take these calls in advance. Okay, now this fellow will not give this 1 lakh people 5,000, so we will take calls in advance. It is no more advance, so we have to close that advance. We have to transfer this advance to the first call. So inga credit ana value inga debit பண்ணிடணும். Then there is also an arrear, calls in arrear account debit. For this we have to do a working note to share first and final call. வரேன் sorry, first and final call debit another 1,50,000, that you credit 1,50,000. In this 1,50,000 1,05,000 we will not receive, because it is already received from calls in advance, that we transferred to the first and final call. So 1,05,000. So this working note we have to calculate calls in arrear. Working note 1. Now you see, Vedika, whom 300 shares were allotted, this is very important, failed to pay first and final call money. Since there is only one group, yes, he no need to pay first and final call, full amount is received. So she comes from this group where there is some excess money remaining, they have to pay. So we have to calculate excess money of Vedika. For that we need to know how much she applied. For that we have to take that applied allotted ratio. Applied allotted ratio is 36:27, that is 4:3. Applied versus is to allotted, 4:3, and she is having 300 shares allotted. So obviously this question mark is 400 shares. So she applied 400 shares. So the due amount, first and final call due amount, she is having 300 shares. 300 shares 5 rupees na 1,500 is due. Subtract her excess application money, that is 400 shares she applied, 300 shares allotted, that means 100 shares with application money 10 rupees. So 1,000 she will be having. So balance 500 is what the arrear is, the arrear. Okay, so put that 500 here and subtract these two value from this 1,50,000 1,05,000 already received. We subtract na, net amount to be received is 45,000. 45,000 500 varlaya, so that means 44,500. So this is what we will receive. Now we are going to forfeit her share, that is the last entry. So forfeiture entry, since the premium is received, we no need to debit the premium. So journal entry should be share capital account debit to share forfeiture account to calls in arrear account. So share capital is number of shares forfeited into MCQ la na sonna. I told you this in MCQ. We have to debit whatever is called out of the face value. Out of the face value 10 rupees, entire 10 is called. That is this 5 and this 5. This 5 and this 5. Okay, so 3000. Share forfeiture பொறுத்த வரைக்கும் the 300 shares only face value received, not the premium received. 300 shares application la 5 rupees. Application is 10 rupees. In that 5 rupees is premium. So you should not include the premium received. So only this one. Okay, not this. Application la 5 rupees received. Plus allotment la, sorry, not allotment. First and final call la excess money 1000 received here. This value. So this is the money received from him. Application allotment. First installment la full amount received. Second installment partially received towards face value. There is only face value in that installment. So total 1500 plus 1000, 2500. Arrear is here. This 500. This what? This 500. That's it. Over. Narration is 300 shares forfeited for the non-payment of first and final call amount. Okay, I will join you after the dinner. Sorry. Okay, let's continue. Kindly use headphone for better clarity in listening. Okay. 25 like B question. Rao Limited forfeited 750 equity shares of 10 each for non-payment of first call 3 per share including 1 rupee premium. Second and final call 3 is not yet made. So which means 10 plus 1. Okay. Application allotment we do not know. First call is 3 rupees including 1 rupee premium. Appo 2 plus 1. This is not paid. Okay. Then second and final call is 3. This is not made. Okay. So this means out of this 10 rupees face value 5 over, remaining 5 is received. Application and allotment together. Of that 500 shares were reissued for, okay, that is reissue. Let's first pass journal entry for forfeiture. Since premium is not received, premium account has to be debited in the forfeiture entry. 25 la B. First forfeiture entry. First we have to debit share capital account. Then first let me write entry. We also have to debit securities premium if not received. In this forfeiture, he did not pay first call which has premium. So premium is not received. So we have to debit securities premium. 2. So regarding this explanation, why this account is debited, why this account is credited, if you don't know, kindly put it in my comment section. I'll explain that separately. 2. Calls in arrears. Okay, this is the journal entry for the forfeiture. 750 shares are forfeited. So share capital I told you 750 number of shares forfeited into called up face value. Out of that face value 10 rupees, how much is called? Application allotment 5 rupees called and paid. First call 2 plus 1 called but not paid, but it is called. So called is 5 plus 2. This 5 rupee, this 2 rupee called, but paid or not paid, that doesn't matter. As soon as we call, we credit share capital, right, in the due entry. So that we have to debit 7 rupees is credited to share capital, that we have to debit. So which is 35 மிச்சம் 3 49 ப்ளஸ் 3 52 4900 plus 350 5250. Securities premium, since there is no pro rata and all, so it's very easy. That means this 750 share ku 1 rupee premium in first and final call not received, so that we have to debit. So money received da share forfeiture ku credited. So 750 share odeya application and allotment, this 5 rupees is received. So into 5, that means into 10 by 2 அது 7500ல பாதி 3750. அரியர்னு பார்த்தோன்னா arrear should always include securities premium. Share forfeiture should not include securities premium if received. Calls in arrear should include the securities premium not received. So say total including securities premium, what happened? Yes, which is okay, 10 plus 1 5 2 plus 1 3. This is not called, this is not paid, this is paid. So this 2 plus 1 is arrear into 3, first and final call 3. So 3 na 1500 plus 750 2250. So that means 6000 total, 6000 tallied. So it's forfeited. Now then after that 500 shares we are reissuing for 7500. This is the money received. 7 paid up na, this is the as if that he paid 7 rupees. That means share capital we are issuing certificate that he paid 7 rupees per share. That means 500 into 7, 3500 we are going to issue, but he is not going to pay 3500. He is going to pay only 2500. Remaining 1000 is a discount for him, which is a loss for us, that we will take it from share forfeiture account. So reissue, there is a discount, so reissue entry will look like bank account debit share forfeiture. You will debit this discount. Share forfeiture account debit to share capital, paid up value share capital 500 shares 7 rupees paid up. So 3500 is the paid up value of the share capital, but he is going to pay only 2500. So this means we are going to give a certificate as if that he paid 7 rupees per share, but he is going to pay only 2500 only. So there is a discount of 1000. Since it is a partial reissue, we have to calculate capital reserve with this formula. Capital reserve is, it's like conversion. This is the gain of 750 shares, but this is the discount of only 500 shares. This you cannot directly subtract. If it is a fully reissue na, you can directly subtract. If it is a partial reissue na, this is 3750 is a gain of 750 shares. So dividing it by 750 share, we will get the gain of 1 share. We want only the gain of 500 shares. So this is the conversion. 750 share oda gain 3750 na, 500 shares oda gain evlo? Okay, minus 500 share oda discount, that is 1000. So 500 shares gain minus 500 shares discount. This is how you have to match. So this is going to be 50 by 75 na, 2 by, that is this 0, this 0, this is 2, this is 3, that is 25 la adichiruken. 3 la adichona 1 2 5 0 into 2 pota 2500 minus 1000, 1500 is the capital reserve. I am not going to pass journal entry. Journal entry is share forfeiture account debit to capital reserve 1500. Okay, then okay, I should not have used these numbers. Number 1 first entry, number 2 second entry, capital reserve number 3. Then case 2. 2000 equity shares forfeited of 10 each. Face value is 10 rupees for the non-payment of first and final call. So full 10 rupees is called, in that 2 rupees is not paid. 750 of the, okay, that is reissue. So this is forfeiture is easy. There is no premium. 8 rupees is received, 2 rupees is not received. So there is no premium. So entry will look like this: share capital account debit to share forfeiture account to calls in arrear account. So 2000 shares forfeited, called up value is 10. 2000 fully called. How it is fully called? See, final call he did not pay. That means till final call we have made call. We have called. So called up value is full value. So 20,000 is, but he paid out of that first and final call 2 rupees he did not pay. That means 8 rupees he paid. Amount received is credited to share forfeiture account, 16,000. Then 2000 into 2, 4,000 arrear. This is the entry, first entry. Then second entry, reissue entry. That is, okay, sorry, I did not read that information. Out of the 2,750 forfeited shares were reissued to Ashok for 10,000 as fully paid up. See, full paid up value is 750 shares. Face value is 10 rupees. Full value, fully paid up. Full means full 10 rupees. So paid up value is going to be 7,500 only. But he is paying 10,000. So 2,500 extra we are receiving, which is the securities premium. Remaining shares were reissued at 9 per share as fully paid up. Okay. I will pass. Sorry, there were some interruptions. I don't know what happened. I was teaching, but I it got disconnected. I completed that sum that I was teaching. These two entry I was about to pass, but I already passed it. So I'll explain it once again since it was disconnected. Yeah. So 750 shares we are going to reissue for 10,000 rupees as fully paid up. So which means 750 or the full paid up value, full value 10 rupees. So 7,500 is the share capital value, but we are going to receive 10,000. So 2,500 is securities premium. Okay. The remaining 1,250 shares were reissued at 9 per share, fully paid up. Full paid up value is 10, but we are going to reissue it at 9. So there is a discount of 1 rupee per share. So this is the, since discount is there, you will debit it to share forfeiture account. If you want, you can combine this also. But it's better to pass separate entry so that it will not confuse you. Now capital reserve. Since all the 2,000 shares were reissued, you can directly subtract from the 16,000 the discount that were incurred, only 1,250. So 16,000 minus, since there are no more shares left, since there were no more shares left, we can transfer the remaining balance in share forfeiture to capital reserve, that is 14,750. Okay. Yes. So the journal entry for this is share forfeiture account debit to capital reserve, 14,750, 14,750. Narration: excess gain on share forfeiture account after reissue has been transferred to or credited to capital reserve account. So this question is over. That is question number 25 இருக்க ரெண்டு forfeiture. The forfeiture entry is a little bit easier than this one because of this one just information. It became little bit difficult. Last year also they included the same sum, same like this sum, exactly same sum, different value. Okay. 26. There are three partners: Promil, Kamalesh, Ritika. Profit sharing ratio 5:3:2. And then there, okay, change in profit sharing ratio in 6 marks question. Okay, they are changing it to 235. See, 532 235. That means this center partner did not sacrifice or gain anything. Same 3/10 3/10. He from 5/10 to 2/10. He from 2/10 to, that is she from 2/10 to 5/10. So Promil sacrificed 3/10. Ritika gained 2/10. Okay, I'm just explaining it by word of mouth. You have to write them in the question paper. Okay. Yes. So what they are asking us to do: show the workings clearly, pass necessary journal entries. Okay, don't read full sum for this journal entries. I will tell you some order to pass journal entry. You just follow those orders. Okay. First, when they ask journal entry, first you go to balance sheet, look at the liability side. Is there anything to be distributed? Yes, we have general reserve. Just check, can we distribute them? There is some land and building revaluation, provision revaluation, goodwill is there, stock revaluation is there. That's it. So they are not saying anything not to distribute. So there is general reserve that we have to distribute 1,60,000 in old ratio 5:3:2. Okay, so journal entry for that is 26 like A. So first journal entry is general reserve account debit to Promila, I think so. Promil's capital account to Kamlesh, Ritika. So 1,60,000 in 5:3:2 whole ratio. So total share 10 divided by 10 bota 1 share is 1 lakh. Okay, 5 share வச்சிருக்கோம், half of the share வச்சிருக்கான். So 80,000, that is 16,000 into 5. 16,000 into 2 வந்து இவன் வச்சிருக்கான் 32 plus ஒரு 16 48. 16,000 into 3. So this is the journal entry for the distribution of general reserve. Narration: general reserve distributed to the partners in whole ratio. Now second, look at again balance sheet. Is there anything else to be distributed? Liability side no, asset side also no items to be distributed like goodwill, profit and loss balance, advertisement suspense, no other reserves, nothing. Then after completion of the balance sheet, this I'm telling you the order to pass journal entry. First balance sheet la irundhu distribute panna vendiya items. Okay, like liability side na general reserve, WCR, IFR, P&L credit balance. Asset side na goodwill, P&L debit balance, advertisement suspense. These are the items generally that you can find it. Okay, then after that revaluation. Since journal entry, don't pass separate journal entry for every revaluations. First go and mark loss and gain. For all gain one entry, for all loss one entry, final profit or loss distribution one entry. Land and building revalued at 6,62,000. Land and building 5,60,000. So there is a gain of difference is 1,02,000, right? 5,60,000 plus 1,02,000 6,62,000. Yes, so 1,02,000 gain irukku. Provision of 5% on debtor has to be made. Provision is liability, but there is no such provision, so we have to create provision. So increase in liability is a loss. 5%, and I will calculate the value and I'll write so that I can directly go and write them in the account, journal entry. 5% on debtors. Debtor is 1,20,000. I'll 10% 12,000. 5% na 6,000. So it's a loss side, loss. Goodwill on it's separate entry, not a revaluation. Value of stock reduced to 2 lakh, not reduced by 2 lakh. It is reduced to 2 lakh from 2,40,000. That means 40,000 reduced. So loss Okay, there are two loss and one gain. I'll pass journal entry first for the gain in the land and building. So gain in the land and building is journal entry for that is whatever account that has gain, debit that account, credit revaluation account, because revaluation gets the gain or a general balance credit, so that has to be credited. That is, and one more thing, land and building is an asset, general balance of the land and building asset debit, that increases, so same effect debit. If you don't know the rules to pass journal entry, I have separate video for that, kindly go and watch them. Land and building to revaluation account, 1 lakh 2000, yes, 1 lakh 2000. Okay, and then third entry, that is gain on land and building credited to revaluation account. Narration. Third entry, loss. For loss, debit the loss to revaluation account, because revaluation receiving loss, debit account. Loss is a debit balance account, so debit revaluation account. 2, credit whatever account that has. There are two accounts. One is provision for doubtful debts, another one is stock. Provision for doubtful debts, another one is stock. I think provision was 6,000, stock was 40,000. 640, yes. So total loss is, so difference is 56,000. Yes, 56,000. Profit is there, that we have to transfer to partners. So now profit is there on the credit side of revaluation account, so that we have to remove. So debit revaluation account, and that profit, credit profit given to partners, so partners account is credited. Revaluation account debit to, there are how many partners? Okay, just now we saw it, Pramil, Kamalesh, Ritika. I'll write shortly. Pramil's capital, Kamalesh capital, Ritika's capital, that is gain to 1 lakh 2, loss 46, difference is 56. Yes, 50. 5 by 5 is to 3 is to 2 whole ratio, so that means half of the share goes to P. He's having 5 by 10 half, so that means 28. 5,600 into 2 na 11,200, so into 3 na 15,800, sorry 16,000, yeah. 20, 30, 40, 54, 55, 56, yes. 9,200 plus 5,600, 16,800, correct. So this is a journal entry for the distribution of profit in the revaluation account. See, to transfer anything, whatever account that is transferring, opposite effect. Revaluation account is transferring the profit in it. Profit is on the credit side of revaluation account, so transfer pandra account, opposite effect, so debit. Receiving account will be debited or credited based on what it receives. Capital account receives profit. Profit is a credit account, so receiving account is credited. If they receive debit account, receiving account is debited. So for example, there is a increase in the land value, so we increase, so there's a gain, so the revaluation receives, so revaluation receives the gain credit account, so revaluation is credited. Here revaluation receives the loss debit balance, so revaluation is debited. So like that you memorize them, so it would be easy for you to pass journal entries. So in that order, balance sheet is over, and then revaluation over. After that, this goodwill 1 lakh 80, gaining, since it is a change in profit sharing ratio, gaining partner to sacrificing partner, we just calculated it roughly. That is, Pramil is the sacrificing partner, Kamalesh is the gaining partner, sorry, Ritika is the gaining partner, but I'll still write that calculation. Old ratio is 5 is to 3 is to 2, new ratio is 2 is to 3 is to 5. Yes, so sacrificing share is equal to old share minus new share. Pramilோட இது வந்து old share 5/10 minus new share. Since base is equal, you no need to do LCM. 5 minus 2/10, 3/10. Pramilக்கு அப்புறம் Kamalesh old share 3/10, new share is also 3/10. So 3 minus 3/10, 0/10. So Pramilக்கு பாசிட்டிவ்ல வந்திருக்கு. பாசிட்டிவ்னா ஃபார்முலாவோட ஆன்சர். ஃபார்முலா இஸ் சாக்ரிஃபைசிங் ஷேர் ஃபார்முலா. ஸோ ஹி சாக்ரிஃபைஸ்டு. தென் ரித்திகாக்கு new old share 2/10 minus new share 5/10. So 2 minus 5/10 minus 3/10. So that means it is gain. So I told you, right? So gaining partner to sacrificing partner, that is the journal entry for the self-generated calculated goodwill. So that means Ritika's capital account debit to Pramil's capital account, that is the goodwill is 1,80,000, right? Yeah, 1,80,000 is the goodwill. 1,80,000 into 3/10, that means 18,000 into 3. 18,000 into 3 na 30 plus 24. Narration: gain and sacrifice of goodwill is adjusted among partners capital account. Yes, 1,80,000, 18,000, yeah, correct. So that's it. That's the last entry over. This question is over. That was simple sum. On totally 1 2 3 4 5 journal entries. This is the 5th entry. One calculation, this gain and sacrifice. So total 6 marks. Very easy sum. Okay, there are two partners, Rinku and Pinky. Profit sharing ratio 3:2. There is a balance sheet given. On the above date, the firm was dissolved. Just they are asking you to pass realization account. Okay, realization account also I have an order. You just follow that order. 26 B. First transfer the debit balance. Sorry, first transfer sundry assets. That is, we have to transfer stock. Should not bank balance or cash balance. We can transfer investment. We can transfer debtors. Provision will transfer the opposite side. Then building will transfer. Provision will transfer, but credit side will transfer. So first, let's transfer to sundry assets. What and all we have? Stock 20, investment 30. Stock 20,000, investment 30,000. I think debtors was 50 or 40, 50. Provision this side. Any asset for which there is any provision or reserve, that has to be transferred to the credit side. Like debtors we have provision, investment we have investment fluctuation reserve. So those two assets or a provision reserve which we have to transfer to the credit, not WCR. WCR is a liability or a reserve that will be transferred to the credit side of realization account only if there is claim, that to the extent of claim. So there is no WCR, we don't need to worry about it. So provision for doubtful debts, there was 5,000. Then we have on the asset side building 3 lakh 40. So total sundry asset transferred 1 lakh plus 3 lakh 40, 4 lakh 40. And then transfer the sundry liabilities. We have creditors, Mrs. Rinku's loan. Okay, Mrs. So okay. You see, Mr. Rinku is a partner. Mrs. Pinky is the partner. So Mrs. Rinku is partner's wife, who is a third party. Pinky's husband is also third party. So these three are third party liability. We have to transfer. Okay, there is investment fluctuation fund. So that's, I told you, right, an asset for which there is a provision reserve, we have to transfer. So IFF we have to transfer to the credit side, just like provision. For debtors we have provision. For investment we have investment fluctuation fund, which was 12,000. So these two we just have to transfer. That's it. Nothing we have to do after that. Then after that, transfer sundry liabilities. So we had creditors, we had Mrs. Rinku's loan, we had Pinky's husband loan. Yeah, Pinky's red happy loan. Okay, 86, 20, 30. 86, 20, 30, 50 plus 86, 136. So these are the journal entries. $136, correct. So there are no more third party liabilities. So we just have to transfer third party liabilities. Okay. So first we transfer asset to the debit side of realization account. Then if there is any provision reserve for asset, transfer to the credit side of realization account. We have to WCR, if it is there na, don't transfer blindly. Check claim. If there is claim na, transfer to the credit side of the realization account, that is the WCR, but not full WCR, to the extent of claim. How much ever, if the reserve is more, claim is lesser na, transfer only to the value of claim, the reserve. If the reserve is 1 lakh, claim is 80,000, transfer only 80,000 of the reserve to the credit side of realization account. If the claim is more na, transfer full reserve. We have that much only, so you transfer whatever you have. But if there is no claim na, don't transfer WCR to the credit side of realization account. And then transfer the sundry liabilities. That is, there are three third party liabilities. Okay. Then after that, show the realization of assets. Read information. Mrs. Rinku agreed to pay Mr. Rinku. Okay, he took over a liability. First, let's complete the sale of asset. Sale of Mr. Pinky took half of this asset taken over. Okay, here we have debtors realized 44, building realized 4 lakh, and remaining investment were sold for 19,000. Old furniture not recorded in the book taken over. Okay, so there are three sales means credit side. Journal entry is bank account debit to realization account. So go to the realization account credit side. Since realization account is credited, opposite account, the debit account, is bank account. This is sale of asset or realization of asset. So debtors kit and realized 44,000. And then we realized building 4 lakh. And then remaining investments, some investment was taken over by Pinky. So remaining investment, we don't want the remaining investment. What value it was sold, it is given 19,000. That is what we want. We don't want whatever the value of the investment is remaining. The investment remaining sold 19,000. After that, no more assets sale. We check whether all the information, assets information is given. We have stock. What about stock information? He took away the stock. So stock information is there. Investment has been sold, taken over and sold. Debtors realized. Building, all assets have been realized. Okay. Then after the sale of asset, taken over of asset, whoever took over, partner taken over. Okay, here Mr. Rinku took away stock of 16,000. Journal entry for this is Mr. Rinku's capital account to realization account. Mr. Rinku's capital account to realization. So go to credit side of realization and write by Mr. Rinku's. So he took only one or two. He took stock 16,000. That's it. No more taken over by Rinku. So only stock 16,000. Okay, this we have to total up. Work out 4 lakh 40 50 63. 4 lakh 63. 4 lakh 40 50 59 63. Yes. So then Pinky, Mrs. Pinky, another partner. Pinky took over investment as well as some old furniture. You see, Pinky took half of the investment, 10% less. Investment is 30,000. In that half na 15,000 value of investment took 10% less na 1,500 10%. So 13,500 she took over investment. So she took over half of the investment at 13,500 plus she also took over that unrecorded old furniture not recorded in the books taken over by Pinky for 18,000. So total Pinky took. So add them 20, 31,500. So that is the journal entry. That is the entry for asset taken over by the Pinky. Yes. After transfer entries, sale of asset, taken over of asset, then payment of liability, taken over of liability. Now check payment of liability. How many liabilities are there? See, assets பொறுத்தவரைக்கும் you have to check have all the assets been sold or taken over. If any asset information is not given regarding sale or taken over, then we have to go by two assumptions. If there is no information regarding a tangible asset, we have to assume that was realized in cash by full value. So here under the bank we have to write that asset for which there is no information with the full value debited, that we have to credit, that it has been assumed as sold. If there is no information regarding an intangible asset, it has to be assumed that it is not realized. So you just have to ignore that. On the credit side, debit side you will transfer, but we cannot realize anything like that. We have to assume. Then regarding the liability, third party liability, if there is information now, go according by the information. If there is no information now, then it has to be assumed that paid in full. So check what about creditors. I think we had somewhere here creditors were paid 5,000 less. Okay, so creditors were paid. Payment of liability is there to bank. Payment of liability. Creditors, they said it is 5,000 less. So creditors 86, 5,000 less na 81,000. What about Mrs. Rinky's loan and Pinky's husband loan? Mrs. Rinky's loan, Rinky took over, so that is liability taken over, next entry. Then what about the information of Pinky's husband loan? You see, there is no information regarding that third party liability. I just told you, if there is no information regarding any third party liability, that has to be assumed as paid in full. So there is no information regarding this Pinky's husband loan. I'll write Pinky's husband loan. There is no, so it is paid in full. That 30,000 is, so total liability payment is 1,11,000. Okay, and after that, liability taken over. This liability was taken over by, see, journal entry for the payment of liabilities, realization account debit to bank. So realization account debit side to bank. Then liability taken over journal entry, realization account debit to partner's capital account, whoever took it. So who took it? Rinku, Mr. Rinku took over Mrs. Rinku's loan. So we will put it in this capital account. That is Mrs. R's loan. Okay, which is 20, any value given. Just they said Mrs. Rinku agreed to pay Mr. Rinku agreed to pay Mrs. Rinku's loan. That means the full value. The full value is how much it is? 20,000. So credit side, sale of assets taken over. Debit side, payment of liability taken over. Like that, if you follow an order, there won't be any confusion. At last, keep commission to the partner and remuneration, realization expense. Commission generally you will find it on the top. That here you see there are no commissions, and there may be also at the bottom, but there is the information regarding realization expense. Realization expense, I'll put a separate video for this. As of now, I'll explain only this adjustment. Realization expenses amounted to 6,000. There is no information regarding who bear this expense, who paid this expense. So we have to assume it is borne by the firm and paid by the firm. Journal entry is realization to bank. So you go on, write to bank realization expense. அது எவ்வளோ? 6,000 வருது. அவ்வளோதான், அவ்வளவுதான். ஓவர். Sorry, again it got disconnected. Okay, I was explaining this calculation only. I think different things, nothing new. I just putting this calculation. I got 86,500. Yes, I'm cross checking it. I did it directly, so I'm cross checking. Total of the credit side it came 6,63,500. Total of debit side it came 5,77,577. This is what I was cross checking it. I just did. I generally do add credit side, then I will write on the debit side. So with the help of the debit side value, I will directly find this value. Okay, so I won't go for the rough calculation and all. Now I am going for the rough calculation the second time. I will always do 2 times every calculation, especially final answers, bigger answer like this, big small revaluation accounts we will know, but realization account is always bigger. So it's better to do the calculation twice. Okay, 500, 3 plus 3 6, 3 plus 5 8, 5 minus 5 0. Yeah, 86,500 is correct. So profit share, distribute this in the profit sharing ratio, and that is 3:2. So 3:2 na divided by total share is 5 divided by 5 na ஒரு ஷேர் வந்து 1 5 போச்சுன்னா பேலன்ஸ் 3 7 5 35 மிச்சம் 1 3 5 15. ஸோ இதான் ஒரு ஷேர். 3 shares are held by R and that key. 3 shares are held by R, so 17,300 into 3 900 7 3s are 21 balance 2 5 17,300 into 2 34,000 85,000 86,580. That's it. It's over. Part A is over. Now let's go to part B. Let's complete it faster. It's already time 11:12. தூக்கம் சொக்குது எனக்கு. முடிச்சிடலான்னு நினைக்கிறேன். பேல் சார்ஜ் வேறு 10% தான் இருக்குது. சப்போஸ் அப்படி முடிக்க முடியலன்னா I'll continue tomorrow. Okay, I'll continue. I'll try to complete it fast as soon as possible. Okay, 27 MCQ option. From the following information obtained from the books of the accounts of Ananda Limited, calculate quick ratio. Quick ratio formula என்னது? Quick asset divided by current liability. Total current asset including stock and prepaid expenses 2 lakh, stock 20,000, prepaid expense 10,000, 30,000 minus panna 1,70,000 is the quick asset, divided by current liability is also 1,70,000. So it's quite easy, 1:1. Okay, analysis of financial statement is useful and significant to the different users. Which of the following user is concerned with the firm's long-term solvency and survival? Long-term solvency only the lenders will find out. Okay, they know because they are going to give loan, so they need to know is the company is capable of paying their long-term liability, which is the long-term solvency, and will they be able to survive in future, so that they can get their interest, they can get their amount paid, amount lent. So lenders is the answer. Statement 1. In case of non-financial enterprises, the payment of interest and dividend are classified as financing activity. Okay, non-financial enterprises payment of interest and dividend is a financial activity is a true. Financial institutions, that depends. If it is for mutual fund abdina, then that's an operating activity. For them it's an operating activity, but non-financial is a financing activity. In case of financial enterprises, payment of interest and dividend are classified as investing activity. False. This is operating activity for them. If it is major business operation, if for them their shareholder they are paying dividend, for them it is financing activity, either operating or financing, not investing. Okay, so statement 1 is true, 2 is false, so option C. Then 29, during the year ended 31st March 2025, HP Limited paid an interim dividend of 50 lakh. Following choose the correct option for the purpose of preparing cash flow. So interim dividend 50,000 they paid. So this is an outflow of financing activity. Okay, 50 lakh paid as an interim dividend during the year will be shown in outflow of cash under financing activity and added to the yes, one effect is cash flow of outflow of financing activity, and the another effect is, since it is a dividend that would have been deducted from surplus, so you have to add it back to calculate net profit before tax and extraordinary items. So what they are saying, and added to net profit to calculate cash flow from operating activities. Yes, so obviously this is the right answer. You no need to check the remaining thing, but let's check again. Outflow of cash flow and financing activities correct, and deducted from net profit. Deducted wrong. Added. See, added 50,000 during the will be shown on cash flow financing activity only, operating activity add பண்ணுவோம். Okay, so here net profit dividend, net profit la mattum add பண்ணுவோன்னு காட்டுறாங்க. So this is also no. So answer obviously A. Which of the following is a financing activity for the purpose of preparing cash flow statement? Interest received is an investing activity. Dividend received is also an investing activity. Royalties received, operating activity. Interest paid, which is the financing activity. So they are asking financing as option D. Following information is obtained from the books of Devdutt Limited: working capital, trade payable, other current liabilities. Current assets of the Devdutt. So working capital formula is current asset minus current liability. So we want current asset, so take the current liability that side, minus current liability will become plus current liability. So current asset is equal to working capital plus current liability. So add all these, that's the current assets, working capital, and we have two current liabilities, add them. So it is 5,50,000. The following information was extracted from the statement of profit and loss of Chaman Limited for the year ended 31st March 2025. Okay, prepare comparative statement. Okay, comparative statements we have to prepare here. 31, right? Achhi. Yes. Comparative statement of P&L ku we need particulars. We need previous year value, which is 2024. We need current year value, which is 2025. We need absolute amount of change. We need percentage of change. So these are the information that we want. Yes. So let's prepare. For income statement, first revenue from operation we have to write. Revenue from operations 2024 வந்து 32 lakh, 2025 வந்து 40 lakh. 32 lakh. You have to be very careful while writing the value. Year மாற்றி எழுதக்கூடாது. 2024 ஓட value 2025 ஓட value மாற்றி எழுதவே கூடாது. So be very careful. Okay, so since there is no other income, just close this value. This is the total revenue. Then after that we need expenses. Expenses la first we have employee benefit expenses 16 lakh, 20 lakh. Employee benefit expenses 16 lakh, 20 lakh. Other expenses 4 lakh, 2 lakh. Other expenses 4 lakh, 2 lakh. 32, 16, 4, 40, 22. That's it. We have to find out now total expenses. That is 20 lakh, 22 lakh. Then we have to find out profit before tax, which is total revenue minus total expense. 32 lakh minus 20 lakh, 12 lakh, 40 lakh minus 22 lakh, 18 lakh. Okay. Then after that we have to deduct tax rate is given for both the year 50%. So 12 lakh la 50%, 6 lakh, 18 lakh la 50%, 9 lakh. So profit, that is profit after tax 6 lakh, 9 lakh. So let's calculate absolute amount. 32 40 lakh ஆயிருக்குன்னா 8 lakh increase ஆயிருக்கு. Then 16 lakh 20 lakh ஆயிருக்குன்னா 4 lakh increase ஆயிருக்கு. 4 lakh 2 lakh ஆயிருக்குன்னா 2 lakh decrease ஆயிருக்கு. So decrease should be in bracket. 20 lakh 22 lakh ஆயிருக்குன்னா 2 lakh increase ஆயிருக்கு. 12 18 ஆயிருக்குன்னா 6 lakh increase ஆயிருக்கு. 6 3 lakh ஆயிருக்குன்னா 9 lakh ஆயிருக்குன்னா 3 lakh increase. This is also 3 lakh increase. Let's find out the percentage. 32 lakh half 16 lakh. In that half 8 lakh, so 25%. 32 is the base value, 100%. 32 lakh 100% la paadi 16 lakh 50%. 16 lakh 50% la paadi 8 lakh 25%. So similar to this, 16 la paadi 8 lakh, 8 lakh la paadi da 4 lakh. So our 4 lakh should be also 25%. This is exactly half. 2 lakh la paadi da 4 lakh la paadi da 2 lakh. So 50% decreased. So put it in bracket. 20 lakh la 10% da 2 lakh. So this is 10%. So total and all for comparative you should not add. See 20 minus 50 minus 25 varum. Answer 10 vandirukku. Because base of the every value is different. 12 lakh la half da 6 lakh. So it should be 50%. 6 lakh la half 50, 50. Okay. That's it, the comparative statement over. Then 32. Major head and subhead. Okay. Demand deposits with the bank, current asset, cash and cash equivalents. Long-term loans. I think it is loans taken only. Loans, no, they generally use the word loans and advances or loan taken. So we have to assume, yes, it's again a confusion creates. So let's assume it as a loan taken. So long-term loans na non-current liability, subhead long-term borrowings. Livestock na like aadu maadu, that is horticulture business people. They have goats, cows, milk producers. For them it is a non-current asset, property, plant, equipment and intangible assets la property, plant and equipment. So under that we have 4 subhead, internal subheads, right? That is what. Okay. So livestock, this is the head and subhead. Next, net assets turnover ratio of a company is 2 times. 1 minute, let me fetch some water. Okay. Okay. Net asset turnover ratio is 2 times. State with reason whether the following transaction will increase or decrease. Net asset turnover ratio formula வந்து ROTW divided by net asset, that is capital employed. So RO means net sales. Capital employed means equity plus long-term debts and long-term provisions. Okay, debt, equity, shareholders fund and debt, that is together is what? Capital employed. Okay, so for this we have a shortcut. Okay, that shortcut I will teach in a separate video. As of now I will teach the shortcut only for the transactions available here. Yeah, okay, cash sales. So when you make cash sales, RO will increase, so revenue will increase and the cash will increase. Since cash does not affect equity and debt, equity and yes, yeah, one effect cash will increase, another effect sales will increase. Sales will be added to the revenue will increase definitely, but capital employed does not get affected. Equity and debt does not get affected by the cash that we receive. So denominator does not change, numerator alone increase. Numerator alone is directly proportional to the ratio. When the numerator increase, ratio will increase. So this will increase the ratio. Then issue of equity shares 10 lakh. So issue of equity shares, equity share will increase, cash will increase. So since cash does not affect our ratio, equity share alone will equity share increase na, capital employed will increase, but RO does not affect. So denominator alone increase, denominator alone increase decrease will inversely affect the ratio. That is, if it increase na, ratio decrease, if it decrease na, ratio increase. Since the denominator alone increases, the ratio will decrease. Okay, I have to do it fast. Issue of 9%, again same the debt will increase, capital employed also, again this is also decrease. Credit purchase of goods, credit purchase of goods stock increase agum, creditors increase agum. Current liability inge illa, current asset inge illa, so this has no effect. Okay, yes. From the following information, calculate proprietary ratio. Proprietary ratio, the formula, I think it is shareholders fund divided by net asset or net asset, sorry, total asset, the total asset divided by shareholders fund. Sorry, capital employed, shareholders fund divided by total assets, right? Yeah, that is equity shareholders fund divided by total assets. So we have equity na, share capital, reserves and surplus. So this three together is what? Equity. So that is 5 lakh. Sorry, 5 lakh. Then total asset na, non-current asset plus current asset. Plant and machinery or non-current asset, non-current investment or non-current asset, current asset. Long-term borrowings namakku venda. So this is together non-current, is to non-current asset, this is current asset. So non-current plus current, total asset. So 3 lakh 50 plus or 3 lakh 6 lakh 50. So 40 to 40, 50 by 15, appo 10 by 13, 10 by 13 na 0.0 7 போட்டா 70 21, சரி 70 21 91, மிச்சம் 9 0 சேர்த்தா 6 வரும், 60 18 78, 78னா 12. So calculate three digits enough. So it is definitely above, this third digit is definitely above 5. So 0.7776. Next value is 5 or third. Based on third digit, you round off the second digit. Third digit is 5 or above 5, na, make the second digit next to 1. If the third digit is below 5, na, just write that second digit as it is. So this is the proprietary ratio. And debt to equity ratio. So debt to equity ratio, na, debt by equity. There is only one debt, long term borrowing, which is 1,50,000. Debt by equity, 1,50,000 divided by equity, we already calculated, it is 5 lakh. So 4015 na 3 by 10, so it is 0.3:1. From the following information obtained, wait, just I have to check. அப்பப்போ செக் பண்ணிகிட்டே இருக்கேன், லைவ் ஓடுதா இல்லையா அப்படின்ட்டு. From the following information obtained from the books of the Informatics India Limited, calculate cash flow from operations. Net profit for the year ended 31st March. So this is what mistake is there. Net profit for the year ended 31st March 2025 after providing depreciation of 60,000. Was na, it means the profit is 60. Off na, it means the depreciation is 60. Profit is here. And after writing off the goodwill of 2000, goodwill 2000 was 3,40,000. Okay. So net profit la, we have rent received in advance, current liability, this is a current liability, this is a current asset, prepaid insurance current asset, outstanding salary current liability, trade receivable current asset, trade payable current liability, inventory current asset. So accrued interest on loan or investment are not given. So generally accrued interest on investment only they give like this. So let's assume it as, again this is also an ambiguity, they should not have given like this. So let's assume it as interest on investment. So they always give like this. Interest in accrued income only they give like this. Generally loan accrued but not due, accrued and due, like outstanding interest, like that they give. They don't give like this. Other current asset, current, this is for working capital changes. So it's very small sum. Let's start. Cash flow statement, operating activity. We have first net profit, that is 3,40,000. So this is net profit before tax and extraordinary item. There is no information regarding tax, dividend, that and all. That is the net profit before tax and extraordinary items. After that, add non-cash and non-operating expenses or losses. We have two non-cash and non-operating expenses. One is depreciation, another one is goodwill amortized, goodwill written off. Depreciation 60,000, goodwill 2,000 written off. After depreciation, after, right, it has been written off from the profit. Since they are non-cash expenses, add it back, non-cash expenses and non-operating expenses, add it back. Okay, not non-operating, this is non-cash, add it back. So depreciation is 60,000, goodwill is 2,000, right? 62, yeah. So 62,000, sorry. There is no non-cash and non-operating incomes, so I'm just ignore that heading. 4 lakh 2000. After that, this is the operating profit before working capital changes. So in this, first we have to add decrease in current asset and increase in current asset, opposite, decrease add, current liability same effect, increase add. Okay, let's go and find additions first. You see, this is a current liability, this has decreased, so this is less. This is a current asset, this has increased, this is also less. This is a current asset, this increased, this also less. This is a current liability which is increased, increase in current liability add. This is a current asset, this increased, increase in current asset less. This is a current liability which increased, so increase in current liability add, current asset, okay, increased, so less. Other current asset increased, so less. There are only two addition. See, received in advance current liability, accrued interest current asset, prepaid insurance current asset, outstanding salary current liability, trade receivable current asset, trade payable current liability, inventory current asset, other current asset. So current liability decrease less, current asset increase less, current asset increase less, current liability increase add, current asset increase less, current liability increase add, current asset increase minus, current asset increase minus. So only two addition, outstanding salary and trade payables. Outstanding salary and trade payables, how much increased? Outstanding salary or 15,000, trade payables or 20,000. 15,000 plus 20,000, total 35, 4 lakh 37, and then subtract increase in current assets and decrease in current liability. We have many, that is decrease, increase, 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 increase. I'm just cross checking it. தூக்கு பக்கத்தில் இருக்க தப்பாக சொல்ல எழுதினாலும் எழுதிருக்காங்க. So we have rent received in advance 10,000, rent received in, light short man, I'm feeling so sleepy. Last question, accrued interest or 10,000, and then prepaid insurance for 5,000, and then trade receivable were 1,000, and then inventory were 30,000, always write the digits properly, align the digits properly while writing, so it will be easy for you while adding mistake பண்ண மாட்டீங்க. Then other current asset 20,000. So if I have made any mistake anywhere, kindly let me know. That's it. So 10, 20, 50, 70, 76. That's it. That much simple cash flow statement, man. இவ்வளோ ஈஸியாலாம் கேஷ் ஃப்ளோ ஸ்டேட்மெண்ட் கேட்டதே கிடையாது எப்பயுமே. 7 minus 6 1, 3 plus 3 6, 3. So this is net cash from operating activity. Over. That's it. Okay. I hope you guys understood what I have taught. Have any doubt? please kindly let me know in the comment section. Okay. Yeah, if you find it useful, kindly leave it a like and consider subscribing. Just 1% battery is there. Bye bye. See you guys in the next video.